Distell is South Africa's leading producer and marketer of wine, spirits and flavoured alcoholic beverages with a market cap of 22.3 billion rand. It was formed from the merger of Distillers and SFW in 2001. It's in the process of growing its presence in North and Latin America, Europe and Asia. It has a price to earnings ratio of 20.8 and a dividend yield of 2.4%. Distell, and again, just look at the share price action, all moving in the same direction. Daniel, you're going to kick off with Distell.
So results came out recently. They were a bit slower than I would have expected. Decent top line growth, but a bit of a squeeze on the margin.
So there is a little bit of a pullback here. I didn't actually see that on the share price graph.
The share price also ran up because there was a cautionary announcement a few weeks ago. Guys, I'm not sure what that's about. I think that possibly what it's about is that they've been experiencing, I think, a bit of difficulty in their spirits portfolio. So I think part of it is that they're not positioned perhaps 100% correctly with the right brands, and they might be acquiring another name in that space, but I'm not sure.
Paul, what's your speculation on their cautionary?
Well, I now know 100% more than I knew before, because I didn't know what on earth they could be referring to. Look, I mean, their brand portfolio is very varied. I mean, all the way from Flight of the Fish Eagles right through to Chateau Libertas. Amarula is in there. South Africa's most popular liquor brand, Klipdrift, is front and center of their production portfolio. For me, the company, as Daniel said, did have a bit of a wobble share price-wise because of that earnings commentary did look a bit muted, you'd have to say. They were really not all that positive. But I like the story. I like the globalization of the brands, and I think it's a good company. And its only other problem is liquidity, because very tightly held.
Liquidity a big issue for you?
Not if you own it, because that's going to protect you on the downside.
You do own it then?
Right,
or your clients own it?
Yes, we do own it. So yeah, I mean, when there's not that much free float, once again, you know, it's not going to get oversold if there's a negative announcement. So Paul
can't get his grubby hands on it?
Well, we're not going to sell to him.
You know, that kind of attitude really sucks, I must say.
Well, he's already said he's not going to sell to you, Paul, so it looks as though you're going to be left out in the cold on this one.
But just to clarify, I mean, SAB Miller owns something like, I think, 30% of it, and Remgro, with its chums at PSG in that KWV Cape Vin structure, owns like another 60%. So it really is extremely hard to get hold of because, you know, pensioners and people like Daniel own the rest. So as much as the company looks quite good, it's a very chunky trader.
So you and the pensioners, I see, are on Distell.
Yeah, I was hoping that there was some distinction there. I didn't think I looked that aged. But
let's carry on with the insults in this show. Daniel, just coming back to, Paul gave a glowing report about the brands within the stable. I see particularly pointing out Klipdrift there. Your thoughts on the brands within the Distell stable?
So by far the fastest growing brands are the ready-to-drinks. Now that market in particular in South Africa is the fastest growing segment. So Distell's represented there with things like Savannah, that is growing exceptionally well. The rest of the portfolio having a bit of wobbles here and there. Like I said, I think maybe they're looking to buff up their spirits portfolio with this cautionary. So good brands overall, but definitely the ready-to-drinks is the space to watch.
Do you like the ready-to-drinks, Paul? Is that a favourable in your book?
No, man. Those
give
drinks
me more
are for
stats on
people.
give me more stats on your drinking habits. So I can throw them to you every show.
Everybody knows. If you must drink brandy and Coke, it's quite simple. Buy a whole bottle of Klipdrift and 2 liters of Coke and just mix them together. You don't have to buy the little can where it's been pre-mixed, which is like twice as expensive. But you can understand why it's doing well. I mean, people like to get out and about. I mean, the fact of the matter is, I think it's a growing target market. There are issues with alcohol in terms of regulation and advertising, but I think it's fairly solid. I prefer SAB because I think beer's got more premiumization type of opportunity, but the liquor brands are strong too.
I'm going to go to Daniel for hot or not on Distell. Before we come to you, Paul. Daniel?
So we hot on the company, we do hold it. It's run very strongly in the last couple of months. So to be the marginal buyer now, I'd be cautious. So moving into the share price at this point, I'd pull back a bit and say not.
Not hot at current share price level. And Paul, from your perspective?
I'm going to go with hot as well. I just think maybe between SAB Miller and Remgro and maybe the idea of a buyout and delisting is a possibility there could be a premium to be snaffled there. So I'm hot as well.